Hi friends, good evening. How are you? So, November exams are nearer. Yes, it's not starting from November this time, it's starting from December. It's starting from December this time. And we have over here a revision of SA 700 series. 700 series in your paper 3 auditing comes for 10 marks. Yeah, this is useful for CA final student as well as CA intermediate student as well. 700 series, again I'm telling you, it comes for 10 marks in your examination. So today 2 hours 4 to 6, tomorrow 2 hours 4 to 6 will be revising SA 700 series. So what we are going to do today? Today it will be SA 700 and SA 705. So your audit report and modification to audit report. So clean report, modified report. This two we are revising. Tomorrow we'll be revising SA 701, 706, 710, 720. 4 standards will be done tomorrow. Now before I move ahead, I like to share with you few things. Just have a look at it. Something interesting. This is our today's session. Now at Unacademy you can take a subscription for the entire group of CA final. Yeah, the CA final group 1, CA final group 2. We don't provide subject wise. We always encourage you to take the full group. And see, full group subscription for 1 year. Imagine CA final, you have a group 1 you can do for 1 year. Group 2 you take another subscription for 1 year. It's costing approximately 15,500. So 15,500 you're able to finish first group. Again 15,500 you're able to finish group 2. And we are coming out with the iconic CA final iconic. In iconic you get a printed books. Yes, you have a printed books available. You have a dedicated doubt solving. The entire team is there for solving your doubts. A separate dedicated team. Test series evaluation will also be done. You write down a test series, we will check it. The evaluation of test series will also be done, and there will be also a discussion, lots of help to improve your self-confidence as well as kind of your enhancing the knowledge. The CA Final Iconic is now launched with physical material. The rates of CA Final Iconic, the plus subscription for Group 1. Plus subscription, that is basically your CA Final Iconic. Group 1 ka, it is 28,500 for 12 months. 28,500. In this 28,500, all 4 subjects of Group 1 with physical material, all things will be covered. Dedicated test series with evaluation, everything is covered in this. So hurry up, take up this iconic subscription, get the physical material as well. And we are also launching a fast track batch. Fast track batch is being launched from 1st September. Yes sir, today is what, 27th, after 4 days. The fast track batch we are starting for CA final group 1 from 1st of September. Auditing I'm starting from 1st September to 15th September. So it is 15 sessions of 4 hours each, 60 hours. The auditing will be from 1st September onwards. FR I'll be starting from 26th of September. Okay, let's begin with today's work now. We are going to today's work. SA 700 and 705 to be revised. Now check the name. Check the name what is given. SA 700. It is Auditor's Report on Financial Statement. Clearly, it's Auditor's Report. We are talking about your report. Now, two things are covered in SA 700. Two things are covered in SA 700. One is forming an opinion. Second is expressing an opinion. The one we form an opinion. Second, we have to express our opinion, the content of audit report. Now, why this essay is there? Every essay has an objective. Every essay has an objective, and to fulfill the objective, there are requirements. The purpose of SA 700 is we want all chartered accountants should be reporting in a uniform manner. If you have unless special comments, if you have a special comment, some issues are there, this, that can be different. Otherwise, the audit report has to be in a uniform way so that the stakeholders, not necessarily shareholder, everyone, the stakeholders are able to understand, this item will be here. We want it in a uniform manner. To check over here, this essay promotes consistency in your audit report. This essay promotes consistency in your audit report, but it also gives you a flexibility to accommodate particular circumstances. It is possible particular circumstances are there which need something different. That accommodation is also allowed. Otherwise, we need a uniform format so that everybody knows which item will be where in the audit report. It promotes credibility in global market. And it also helps the user in understanding the audit report better and to identify the unusual circumstances. It helps the user to understand the financials, the audit report better and to identify something unusual in financials, in your audit report. So this is just the introduction. Why we are having this essay. Okay, the objective, there are two things. This essay, there are two objectives given. One, you form an opinion on financial statement. LA, forming an opinion. Second, clearly express your opinion through a written report. Clearly express your opinion through a written report. Form an opinion, express an opinion. Now, we form opinion on what? As an auditor, we give opinion on what? इस पे हम opinion देते. Sir, financial statement, correct. So we give opinion on financial statement. Now, the financial statements which are they prepared only for one specific user or it is for overall general users at large? The financial statement prepared by management, are they for one specific user or are they for overall user, all shareholders, bankers, creditors, debtors, government, everyone? Sir, everyone. And that's why we call it as general purpose financial statement. The financial statement which management prepares, their general purpose financial statement. Can there be a special purpose financial statement? Yes. Can there be a special purpose financial statement? Answer is yes. Special purpose financial statements are the financial statements prepared considering information need of a specific user. Imagine I wanted a loan. Imagine I wanted a loan. I go to my friend. I wanted a loan. I go to my friend and I say that to my friend that I need a loan. He says, Niket, I'll give you the loan, but let me see your financials first. I gave him the financials. I gave financials to my friend. I wanted a loan from him. And there are so many debtors, creditors, all that things there. He says, Niket, I don't understand this. Do one thing, prepare financial statement on cash basis. Prepare financial statement on what basis? Cash basis. So I am preparing financial statement on cash basis, particularly for getting a loan, only for giving it to my friend. Okay, this financial statement which I am preparing just to get a loan for just one of my friend, this is a special purpose financial statement. So normally this SA 700 is framed considering general purpose financial statement in mind. SA 700 is framed in a manner considering its general purpose financial statement. If there is a special purpose financial statement, we can use the content given here. The SA 700 ka content can also be used, but here we are reporting on what? General purpose financial statement. What do you mean by the word general purpose financial statement? What do we mean by the word general purpose financial statement? They are the financial statement prepared. Considering information need of wide range of users. We are reporting on what? Financial statement. Financial statements are which type? General purpose. They are prepared considering information need of wide range of users. Now see, what do they say? They say general purpose financial statement are the financial statement prepared using general purpose framework. Okay. Their financial statement prepared using general purpose framework. The question comes, what is general purpose framework? Go down. Just go down. You'll find general purpose framework. General purpose framework is a financial reporting framework designed to meet the information need of wide range of users. Designed to meet information need of wide range of users. The simple words may general purpose financial statements are the financial statements which are prepared considering the information need of wide range of users. So we are reporting on this general purpose financial statement prepared by. Do we prepare financials? Auditor will prepare? No, sir, prepared by management. Correct. So we are reporting on general purpose financial statement which has been prepared by management. Now, just tell me one thing. A management will prepare financial statement. Complying with laws. Okay, would they also be giving some extra disclosure to have a better presentation? Management will prepare financial statement complying with laws. That's correct. Would they be? Would they be giving some additional information, extra information to have a better presentation? If answer is yes, then it is called as a fair presentation framework. So now, general purpose framework is divided again in two parts. This general purpose framework is divided in two parts. Over here, if you see, it may be a fair presentation framework or it may be a compliance framework. Okay, this is very important. It may be a fair presentation framework, it may be a compliance framework. Now, what is this fair presentation framework, compliance framework? Very important. Very important. The language which will come in your audit report depends on which framework is followed. The language which will come in your audit report depends on which framework is followed. Under compliance framework, under your compliance framework, the financial statements are prepared by management complying with laws and regulation. Under compliance framework, the financial statements are prepared by management complying with laws and regulations. So now, if management says we have prepared financials complying with laws and regulation, if management says we have prepared financials complying with laws and regulation, how will we report? How will we report? In our opinion, to the best of information according to explanation given to us, the aforesaid financial statement are prepared in accordance with XYZ laws of India. If they are following compliance framework, I repeat again, if they follow compliance framework, they are preparing financials complying with some laws and regulation, in our report also will write the financial statement are prepared complying with XYZ laws of India. We don't write the word true and fair. The word true and fair will not come in our report if it is a compliance framework. Now, second is a fair presentation framework. Second is a fair presentation framework. Under fair presentation framework, management will comply with laws and regulation. Management will comply with laws and regulation, plus they may give some disclosures beyond the requirement of law to achieve a better presentation. They may give disclosures beyond the requirement of law to achieve a better presentation. If they are giving some extra disclosures, then it's a fair presentation framework. And if they follow fair presentation framework, then I use the word financial statement shows a true and fair view. If they follow fair presentation framework, then I use the word financial statement shows a true and fair view. I repeat again, in my audit report, in our audit report, would we use the word true and fair? If they prepared financial statement complying with laws and regulation, compliance framework, word true and fair will not come. If they followed fair presentation framework means they comply with law and they give some extra disclosures. They comply with law and they give some extra disclosures to achieve a better presentation. In that case, our report will have the word true and fair. Now, sir, in Companies Act, which is the framework followed by the companies? If company has prepared financial statement, we are reporting on a company's financial, which framework they would have followed? So companies would have followed fair presentation framework. I write over here as a note, companies would have followed fair presentation framework. Now, sir, why do you say companies would have followed fair presentation framework? If you just recall your Schedule 3, Schedule 3 may it's clearly written. In your Schedule 3, it's clearly written, these are the minimum disclosures which are required. The Schedule 3 gives you the minimum item which comes on face of balance sheet, face of P&L, or minimum items which come in your notes. The Schedule 3 tells you the minimum disclosure. So can I say that management will be required to give extra for achieving a better presentation? Yes. So Companies Act companies will always follow. Management prepares financial, they decide whether compliance framework, fair presentation framework. So companies will always follow fair presentation framework. Schedule 3 says these are minimum disclosures. And one more hint, Section 143 subsection 2. Section 143 subsection 2 of your Companies Act. Auditor has to report whether the financial statement shows a true and fair view. True and fair comes only when it's a fair presentation framework. The companies always follow fair presentation framework. I repeat again, if they have followed compliance framework, word true and fair will not come in our report. If they have followed fair presentation framework, then only the word true and fair will come in our report. Okay, moving ahead. This was the two types, compliance framework and fair presentation framework. Now what's unmodified opinion? SA 700 is unmodified opinion. 705 is modified opinion. What is unmodified opinion? The auditor gives an unmodified opinion when opinion expressed by auditor, when auditor concludes the financial statements are prepared in accordance with applicable financial reporting framework. So opinion expressed by auditor when I conclude that the financial statements are prepared, they are prepared in accordance with applicable financial reporting framework. Simple words mean they are prepared as per the laws and regulation. The financial statements are fine. There are no material misstatement. No material misstatement. I will give an unmodified opinion, also known as clean report. I'll give an unmodified opinion, also known as clean report. Now, there were two objectives in SA. One was forming an opinion. Second was expressing an opinion. Let's go to forming part. This is about forming an opinion. Let us go to forming an opinion. For forming an opinion, two major things. One, whether we have obtained sufficient appropriate audit evidence in order to base an audit opinion. So, whether you obtain sufficient appropriate audit evidence, auditor has to conclude whether sufficient appropriate audit evidence has been obtained. And number two, while doing audit, you would have identified some misstatements. SA 450. This is all recollection of all essays. In 700, all essays, everything will come over here. In your SA 450, we evaluate the misstatements identified during audit. So while doing audit, we found some misstatement. SA 450, we evaluated the misstatement. Whether the evaluated misstatement, see, once I evaluate the misstatement, if I find misstatement, I communicate to management. Tell them to correct it. If they correct, well and good. If they don't correct, I'll tell it to TCWG, higher level people. If they correct, again well and good. If they don't correct, I will evaluate uncorrected misstatement. I repeat, we'll evaluate the effect of uncorrected misstatement. See, if there was a misstatement, I told them, they corrected it. Financial statements are fine. Mistake is already corrected. So problem is when the misstatement is uncorrected. So I need to evaluate the effect of uncorrected misstatements. The auditor has to conclude whether the uncorrected misstatements are material individually or in aggregate. The auditor has to conclude on two things. For forming an opinion, you have to conclude on two things. One, whether you obtain sufficient appropriate audit evidence necessary for the purpose of audit. And two, whether uncorrected misstatement, clearly I highlight the word uncorrected misstatements are material. If uncorrected misstatements are material, or you're unable to obtain sufficient appropriate audit evidence, we'll end up giving a modified report. So we are unable to obtain sufficient appropriate audit evidence to base our opinion, or the financial statement contains a material misstatement. The uncorrected misstatements are material. We'll end up giving a modified report. And now, whether uncorrected misstatements are material or not, for that we evaluate. Accounting policies are properly disclosed. They are appropriately selected and consistently applied. Estimates made by the management are reliable. The information is presented in a manner it is relevant, reliable, understandable, comparable. The information presented is relevant, reliable, comparable, understandable. Adequate disclosures are done for all important things. Terminologies used in financial statements are appropriate. Terminologies used in financial statements are appropriate. Okay, can I use, pay attention, can I use the word, can I use the word long-term asset, short-term asset? No, I have to use non-current and current. I cannot use long-term and short-term. It has to be non-current asset, current asset. And if management is following fair presentation framework, if management is following fair presentation framework means they will not only comply with law, they will also give some extra disclosure. They'll also give extra disclosure to achieve a better presentation. So I have to check, so I have to conclude the overall presentation. I have to see whether the financial statement achieves a fair presentation, while conclude whether overall presentation, structure of financial statement, everything is proper or not. Okay, so for forming an opinion, generally what all do we see? We see accounting policies are properly disclosed. Remember, significant accounting policies are to be disclosed at one place. Then accounting policies selected are appropriate. They are consistently followed. Estimates made by the management are reasonable. Information what is presented is relevant, reliable, understandable, comparable. Adequate disclosures of all important things are done. Terminologies used are proper. If they say we have followed a fair presentation framework, extra disclosures are given to make the financial statement more better. So this all things we evaluate, and we have to conclude on two things. First, whether we have obtained sufficient appropriate audit evidence to base our audit opinion, and whether the effect of uncorrected misstatements are material or not. We have to conclude on these two things. Now, based on conclusion, your report will come. Just go down, see. This point is important. Pay attention. Okay, sir, where do I get this material? This material is the same which I have issued to you in class. So those students who already attended my class, it's same. For others, I'll put up a link. I'll put up a link in the chat box over here later. At the end of the class, I'll put up a link where you can find this material, the full material. I'll put up the link of the full material of FR, full material of auditing. You can download it and you can read it for your reference. The full auditing material ka reference link, I'll put it in the chat box later. Currently, just pay attention. We are just revising. Okay, if the auditor concludes based on audit evidence is obtained, you conclude the financial statements are not free from material misstatement. Okay, if you conclude financial statement contains a material misstatement, then you will give a modified report. This is one. Or, word is or. If you conclude financial statements contain a material misstatement, or you are unable to obtain sufficient appropriate audit evidence in any of those two cases, word is or, any of these two cases, the auditor shall modify his report. Auditor shall modify his report, and now the report will be as per SA 705. We'll come to it after I finish 700. So today only we are doing 700 as well as 705 both. So if you conclude the financial statements contain a material misstatement, or you are unable to obtain sufficient appropriate audit evidence, you'll end up giving a modified report. Now comes your reporting. One was forming a report, forming an opinion. Now expressing clearly your opinion. We are expressing clearly our opinion, and I'll keep open Infosys ka audit report to practically check this. I'll keep open Infosys ka audit report to practically have a look at this. I'm just opening the Infosys audit report for our reference. This is just for our reference. I'm opening the Infosys audit report. So we will see the points and we'll check out whether report has all that things or not. So it's not just theory. Practically we have the same thing applicable. We'll just try to look at that. Okay, this is the Infosys audit report which I'm opening. It might not be visible to you properly. It's okay. I'll read the things as well. Okay, coming back to our material, then I'll come back to Infosys. Audit report. First of all, the title. The title of your audit report should clearly state it's an independent auditor's report. First is title. Title is independent auditor's report. Number two is addressee. Addressee. We give report to whom? Now, audit can be of a company also. Audit can be of a sole proprietorship, partnership, trust, anyone. And essays are applicable when you do all audits. The essays are not only for company audit. Tax audit, maybe essays are applicable. Essays are not only for company audit, for tax audit also they are applicable. So addressee, essay says appropriate, as appropriate, based on circumstances of engagement. Now, for company, it is addressed to members. For company, it is addressed to members. For company, the report will be addressed to whom? The members of ABC Limited. The title, Independent Auditor's Report. Addressee is appropriate. For company, it will be the members. Now comes your opinion. Okay, directly your opinion comes. So what about management responsibility, auditor's responsibility? They will come later. What about management responsibility, auditor's responsibility? They will come later. We directly have opinion coming first. Okay, so let's go directly to first opinion. Now, heading will be opinion. The heading of this will be opinion. If it's a modified report, heading will be qualified opinion, adverse opinion, disclaimer of opinion. Otherwise, heading is just opinion. There are two para. One is a kind of intro para. So this is first para, kind of intro. And second is the actual opinion. You give your opinion in the second para. The one is intro, what you audited. So we say, we have audited the accompanying financial statements of ABC Limited, which comprises of balance sheet as at this date, statement of P&L and cash flow statement for year ended on this date, and a summary of significant accounting policies and other explanatory information. So we have to identify the entity. We have to state the financial statements have been audited, give the titles of each financial statement, date and period covered by each financial statement, and also refer to the significant accounting policy as well. This is intro para. And then comes your actual opinion. Now, in your actual opinion, pay attention. In your actual opinion, the wordings will be, in our opinion, to the best of information, according to explanation given to us. In our opinion, to the best of information, according to the explanation given to us. And then we say, if they follow compliance framework. Okay, if they follow compliance framework, whether true and fair will come in our report. If they follow compliance framework, whether the word true and fair will come in our report? No. True and fair will come in our report only when it's a fair presentation framework. If it's a compliance framework, what do we say? We'll say the financial statements are prepared. The accompanying financial statements are prepared in all material respect in accordance with applicable financial reporting framework. If it's a compliance framework, we'll just say the accompanying financial statements are prepared as per the XYZ laws of India. But if it's a fair presentation framework, you can use any of the following phrases. We can use any one of the following phrases. One option, the financial statement shows a true and fair view. One will be the accompanying financial statement gives a true and fair view of the financial statement as in this is it. Okay. Or second option, the financial statement presents fairly. The two options are given. Either you write the financial statement presents fairly, or we use the word the financial statement gives a true and fair view of state of affairs as at this date, profits and cash flow for year ended on this date. State of affairs as at this date, profits and cash flows for year ended on this date. This is how we are going to report. Pay attention. if management prepared financial statement following compliance framework, word true and fair will not come in our report. If they followed fair presentation, then only the word true and fair will come in our report. Hope you're clear with this. Okay, let's go to Infosys audit report and we see first three things. This I'm going to Infosys audit report. Okay, check what is written. First, title, Independent Auditors Report. Addressee to the members of Infosys Limited. And then comes your opinion. Now, if you just see, there are two paras over here. This is the first para. This is the second para. There are two paras over here. The first para is kind of intro. First para is intro. We have audited the accompanying standalone financial statement of Infosys Limited, which comprises balance sheet at this date, P&L account, statement of changes in equity. Now, statement of changes in equity is only for companies following Ind AS, and cash flow statement for year ended on this date, and a summary of significant accounting policy, other explanatory information. Okay, so this is intro, and now comes actual opinion. In our opinion, to the best of information, according to the explanation given to us, the aforesaid financial statement give a true and fair view. Aforesaid financial statement gives a true and fair view, kiska, of the state of affairs as at this date. Profits, cash flow statement, statement of changes in equity for year ended on this date. Can I say ditto, same to same? First title, addressee, opinion. Let's come back to our material. Let us come back to our material. Now, next is basis for opinion. Now tell me, how did you give your opinion? Did you check it? Yes. How did you check it? Check kaise kiya, sir? In accordance with standards on auditing. Okay, so in your basis of opinion, there are one para, 4 statements. There's one para, 4 statements. Which are the 4 statements there? Which are the 4 statements there? So first one is, you need to state the audit is conducted as per standards on auditing. You need to state audit is conducted as per standards on auditing, and then you say our responsibility, auditor's responsibility. Our responsibility as per this standards. Our responsibility as per this standard is given in a separate section, auditor's responsibility in relation to audit of financial statement para. Refer to the section which describes your responsibility. Refer to the section which describes your responsibility. Third, you need to make a statement that we are independent of the entity. We are independent of the entity in accordance with the relevant ethical requirements, and we also fulfilled other ethical requirements in accordance with ICI, and refer to the code of ethics. We are independent of the entity in accordance with the code of ethics and the other relevant ethical requirements which are issued. I'm independent, that you need to tell. And the fourth one, we believe that the audit evidence we obtained is sufficient, appropriate to provide a basis for our audit opinion. We believe that the audit evidence we obtained kaisa hai wo, is sufficient, appropriate. We believe the audit evidence we obtained is sufficient, appropriate to provide a basis for our audit opinion. Okay, so this para, one para, 4 statements. It is one para, 4 statements. Let's go back to Infosys. If you see, next is basis for opinion. Basis for opinion. Same 4 statement. We have conducted the audit in accordance with standards on auditing issued under section 143(10) of the Act. 143 subsection 10 gives definition of auditing standard. Our responsibility as per this standard are described in auditor's responsibility in relation to audit of standalone financial statement section of our report. Our responsibility is as per this section of our report. It's already given separately. We are independent of the company in accordance with Code of Ethics issued by ICI together with the relevant ethical requirements. We are independent. And last, we believe that the audit evidence we obtained is sufficient, appropriate to provide a basis for our audit opinion. Ye tha basis for opinion para. Next one. Boeing Concern. Now this is as per SA 570. This is as per SA 570. Now imagine there are material uncertainty related to going concern. As such, you are a going concern, there's material uncertainty. Simple example, Vodafone Idea Limited. Vodafone Idea Limited is in trouble currently. Do you know why? Vodafone Idea Limited is in trouble currently. Do you know why? Why they are in trouble? Sir, government has asked them to pay some AGR dues. Yeah, government has asked them to pay some AGR dues and they have to pay around 30,000 crore rupees. So AGR dues government has taken out and they are required to pay. Now they are in trouble. They have filed an application for recalculation, telling sir calculations are not correct. First they filed a case with Supreme Court, ye galat hai, they lost the case. So pay to karna hai. Now they are telling the calculation is not correct, it should not be this much. It should not be this much, it should be lesser amount. It should not be this much, it should be lesser amount. So now the issue is that. Now question arises. So now the question arises, as such, Vodafone Idea Limited is a going concern, but there's a material uncertainty. Now they have appropriately disclosed it in financial statement. They have appropriately disclosed in financial statement that there's a material uncertainty related to going concern which is there. We have filed an appeal telling that the calculation is not correct. If we lose the case, we may not remain a going concern. Okay, they've clearly written in financials. Can I say financial statement shows a true and fair view? They've clearly written it in financial statement. The financials are showing a true and fair view. I will give a clean report. There's nothing wrong in financial. They've aptly disclosed it in financial statement. I'll give a true and fair view, clean report. But the matter is very important. So SS 570 says, if there's a material uncertainty related to going concern adequately disclosed by management, you give a clean report, but you add one extra para. You give a clean report, but you add one extra para, drawing attention of the users. So I'll have one extra para drawing attention of the users. We draw your attention to note number 10 of financial statement, which describes material uncertainty related to going concern. We draw your attention to note 10 of financial statement, which describes material uncertainty related to going concern. So this is only if there's a material uncertainty related to going concern adequately disclosed, we draw attention here. So this may not come for all, it's only for few. Next, key audit matter. Number 5 is done. Number 6 is key audit matter. Now, key audit matter, this is as per SA 701. We are going to do it tomorrow. This is as per SA 701. We are going to do it tomorrow. So I'm not discussing this. So when you do audit, which are the areas you focused more? When you're doing audit as an auditor, which are the areas you focused more? That is key audit matter. Uska details are to be given as per SA 701. We'll be doing it tomorrow. Next is the responsibilities. Oh, now comes your responsibility. Management responsibility, auditor's responsibility. One is management responsibility. Second is auditor's responsibility. The heading will be responsibility of management. Kiska responsibility? Management ka responsibility. Heading will be like this. Now, management responsibility kya hai? Okay, so one, management is responsible for preparation and presentation of financial statement as per the applicable financial reporting framework. Applicable financial reporting framework means laws and regulation. The management is responsible for preparation and presentation of financial statement as per the applicable financial reporting framework. Now pay attention. If management is following fair presentation framework, the wordings will change. The management is responsible for preparation and presentation of financial statement. That shows a true and fair view. The word true and fair view comes only if it is fair presentation framework. Companies Act, it's always fair presentation framework. So one, they have a responsibility for preparation of financial statement in accordance with applicable financial reporting framework. Second, management is required to design, implement and maintain internal controls. Pehle design karna, implement karna, then maintain. Design, implement and maintain internal control which will ensure the financial statements are free from material misstatement, whether due to fraud or error. which will ensure the financial statements are free from material misstatement, whether due to fraud or error. And management is required to assess. Okay, now tell me, who prepares financial management? Whether financial statements should be as per going concern or not. Whether financial statements should be as per going concern or not, that is to be decided by management. The management is required to assess, evaluate whether they are going concern or not, and based on that they should follow the going concern basis of accounting. The third over here is assessing the entity's ability to continue as going concern and whether to use the going concern base of accounting, whether it's appropriate or not. Okay, so management has to assess whether they are going concern or not, and based on that they will decide whether to use going concern base of accounting or not. As an auditor, I have to conclude whether the assessment by management is proper or not. So who has to decide whether to follow going concern assumption or not? Management. Whether to follow going concern base of accounting or not, management will decide. So they have to assess it. I will conclude whether their assessment is correct or not. Okay, so management is responsible for preparing financial statement which shows a true and fair view. Second, unka responsibility is designing, implementing, maintaining internal control. And third, assessing the company's ability to continue as going concern. Now this is fine. This is fine. This is actually the first para. There are three paras over here. There are three para. Actually, this is the first para. Evaluating going concern is actually the second para. And those charged with governance, the top level people, the top level people, they are responsible for oversight of financial reporting process. This is the third para. This is third para. So there are three paragraphs in management's responsibility. If I go to audit report of Infosys, you'll find three paras are there. And just one more thing, if it's a company, section 134 subsection 5 director's responsibility statement. If it's a company, section 134 subsection 5 is director's responsibility statement. So as per that director's responsibility statement, they take some responsibilities. The board of directors are taking responsibilities. Sir, what? Regarding maintenance of adequate accounting records. For the purpose of prevention, detection of fraud and error, safeguarding of asset. So maintenance of adequate accounting record, safeguarding of asset, prevention, detection of fraud and error, applying proper accounting policies, selecting accounting policies appropriately, applying them consistently, making estimates and judgments which are reasonable. Okay, so these are 5 extra responsibilities which are given under section 134 subsection 5. If I am giving a report for a company, add this also in your management responsibility para. Let's check Infosys. Report. The key audit matter I told you will be doing tomorrow. SA 701 key audit matter. Going to management responsibility for standalone financial statement. The company's board of directors are responsible for matter given under section 134 subsection 5. 134 subsection 5 is director's responsibility statement. Okay, with respect to preparation of financial statement that gives a true and fair view. Word that gives a true and fair view comes because it's a fair presentation framework. Companies Act always fair presentation framework. One, they are responsible for preparation of financial statement that gives a true and fair view. This responsibility also includes maintenance of adequate accounting records, safeguarding the asset, prevention, detection of frauds and other irregularities, selecting proper accounting policies, applying them consistently, making judgments and estimates which are reasonable and prudent. Okay, this all came from section 134 subsection 5. So actually there's only one as per the standard. preparation, presentation of financial statement which shows a true and fair view. Now comes second one as per standard. Designing, implementing, maintaining internal control that which are relevant to preparation, presentation of financial statement that gives a true and fair view that the financial statements are free from material misstatement, whether due to fraud or error. So, designing, implementing, maintaining adequate internal financial control relevant to preparation, presentation of financial statement that gives a true and fair view and are free from material misstatement, whether due to fraud or error. Now the second para. The management is responsible for assessing company's ability to continue as going concern and using the going concern base of accounting. And third, the board of directors are responsible for oversight of financial reporting process. See three paras. Pehle one big para, then they have to assess going concern, and third is BOD are responsible for oversight of financial reporting process. Same what is there. This is Infosys ka annual report, latest one, unka audit report. Going back to our theory, this was management responsibility para. Now coming to auditor's responsibility para. Three big paragraphs. Auditor's responsibility, three big paragraphs. Three big paragraphs. Sir, which are the three big paragraphs? Let's see. First, what is your objective? To obtain reasonable assurance that the financial statement as a whole are free from material misstatement, whether due to fraud and error, and issue an audit report which includes our opinion. So, pehle will write about the first para. This is actually the whole of first para. So first we write about our objective. State our objective is to obtain a reasonable assurance. Issue audit report includes our opinion. Now, obtain a reasonable assurance. Now we explain what is reasonable assurance. It's a high level of assurance, but not a guarantee. It's a high level of assurance, but not a guarantee that audit conducted in accordance with standards on auditing will always detect a material misstatement if it exists. It's a high level, not absolute. And now the word came misstatement. See, ek se dusra. First we are telling what is our objective. Obtain reasonable assurance. Then we explain what is reasonable assurance. High level of assurance, but not a absolute assurance. Now word came misstatement. So what do you mean by misstatement? Misstatement can arise due to fraud or error. Individually or in aggregate, they can be material if it influences the decisions of users of financial statement. This is your para number 1. Then comes your para 2. How do you do the audit? This is whole your para 2. How do you do the audit? This is fully all things para 2. Second para. Okay, the first para mein we write about our responsibility to obtain reasonable assurance, give opinion. Now then we explain what is reasonable assurance, and then we explain what is misstatement. Check Infosys. Okay, let me finish all three para. Then I go to Infosys. Now second para is how do we do the audit. So we write, while conducting audit, we maintain professional skepticism, exercise professional judgment throughout the audit. So we exercise professional judgment, maintain professional skepticism throughout the audit. Then we say, in audit, what do we do? All essays kind of recollected. What do? We identify and assess the risk of material misstatement in the financial statement, whether due to fraud or error. Oh, essay 315. We identify and assess the risk of material misstatement in the financial statement, whether due to fraud or error. Based on that, we design and perform audit evidences responsive to those risks and obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. So this is SA 315 and 330. This all things came from 315, 330. We identify and assess the risk of material misstatement in the financial statement, whether due to fraud and error. Then उसके बाद पहले identify करो risky area. We design procedures responsive to those risks, and we obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. Okay. Second, we obtain understanding of internal controls. We obtain understanding of internal control relevant to audit. Which internal controls? Which are relevant for us, not all. We obtain understanding of internal control relevant for audit in order to design the other procedures which are appropriate in circumstances. Pay attention. I check your control so that if your controls are good, other things I'll check less. If controls are not good, other things I'll check more. So in order to decide what will be the other audit procedures appropriate in the circumstances. And one more thing, if it's a company, we have section 143 subsection 3 clause I. We have section 143 subsection 3 clause I, reporting on IFC. We are also required to report on adequacy of internal financial control and its operating effectiveness. If it's a company. If it's not a company, we don't have to report on IFC. If it's not a company, we don't have to report on IFC. So we obtain understanding of internal control in order to design audit procedures which are appropriate in circumstances, but not for the purpose of expressing opinion on internal control. This is if it's not a company. If it's a company, we give opinion on IFC. The wordings will be, we also have to give opinion on adequacy and operating effectiveness of internal financial controls. So normally, we understand control to design procedures which are appropriate in circumstances, not for expressing opinion on IFC, internal controls. IFC reporting required, so this lines will be removed. ये जो underline thing है ना, this underline thing, ये इतना part, this underline thing will be removed if IFC reporting is required. This underline thing will be removed if IFC reporting is required. Okay, then what do we do? We evaluate. We evaluate appropriateness of accounting policies used by management, reasonableness of accounting estimates made by management. We conclude. See, management assessed whether they are going concern or not. We'll conclude on appropriateness of management's use of going concern base of accounting. We conclude on management's use of appropriateness of management's use of going concern base of accounting. And if it's a fair presentation framework, we'll evaluate the overall presentation structure, content of financial statement, and we try to see whether that achieves a fair presentation. We'll evaluate the overall presentation structure, content of financial statement, and we'll try to see whether it achieves a fair presentation or not. The second para, how do we do your audit? Oh, क्या था second para में? One, क्या था second para में? One, we exercise professional judgment, maintain professional skepticism. Second, we identify and evaluate, assess the risk of material misstatement, whether due to fraud or error. And based on that, we design audit procedure responsive to those risks, and we obtain sufficient appropriate audit evidence to provide a base for audit opinion. Then we obtain understanding of internal controls relevant to audit in order to design the other procedures which are appropriate in circumstances. Then we evaluate appropriateness of accounting policies used, reasonableness of accounting estimates made by the management. Fourth, we conclude on appropriateness of management's use of going concern base of accounting. And last, if they follow fair presentation framework, we evaluate overall presentation structure, content of the financial statement, whether they achieve fair presentation. Now this fourth point, this was as per SA 570. So SA 315 came, SA 330 came, this is SA 570. And now third para. The third para is talking about communication. You talk about communication. We communicate to TCWG. This is as per SA 260 and 265. SA 260 and 265. SA 260, communication of audit matters to those charged with governance. Communication of audit matter to those charged with governance. SA 265, communication of deficiencies in internal control. Communication of deficiencies in internal control. Communication of deficiencies in internal control to management and those charged with governance. Okay, so we communicate to TCWG what? Planned scope and timing of audit. We communicate to TCWG amongst other matter, planned scope and timing of audit, significant audit findings. Significant audit finding including significant deficiencies in internal control. This is as per SA 260, 265. Plus, we also make a statement to TCWG, we were independent. We make a statement to the TCWG, we have complied with ethical requirement relating to independence. We have considered the threats relating to independence and the appropriate safeguards taken. We also communicate the threats related to independence and the appropriate safeguard taken by us. And third one, this is for key audit matter. This is for key audit matter as per SA 701. I'll take it together with 701. Sometimes key audit matters are not communicated, law doesn't allow us. That all is written. That all is written over here. Okay, so this was third para in your auditor's responsibility. This is the third para. There are 3 paragraphs in auditor's responsibility, big ones. 3 paragraphs in auditor's responsibility. Let's check Infosys audit report. Let us check the Infosys audit report. This is auditor's responsibility. This is para 1. Ye pura para 1. Then comes para 2 and lastly para 3. Lastly para 3. I'll read the things, pay attention. First para kya tha? Our objective is to obtain reasonable assurance, express an opinion. What is reasonable assurance? What is material misstatement? Okay. Our objective is to obtain reasonable assurance whether the financial statement as a whole are free from material, whether due to fraud and error, and issue a report that includes our opinion. Reasonable assurance is a high level of assurance but not a guarantee that the audit conducted in accordance with SA will always detect a material misstatement when it exists. Misstatement can arise due to fraud or error and can be material if individually or in aggregate they can influence the decisions of users of financial statement. Ye para 1. Now going to para 2. How do we do audit? As a part of audit, what do? We exercise professional judgment, maintain professional skepticism. We also identify and assess risk of material misstatement, whether the financial statement as a whole are free from material misstatement, design audit procedures responsive to those risks, and obtain sufficient appropriate audit evidence to provide a basis for our audit opinion. Uske baad, we obtain understanding of internal financial control relevant to audit to design the audit procedures appropriate in the circumstances. Now, Infosys is a company. Infosys is a company. Whether IFC reporting is required, Section 143, Subsection 3, Clause I. Whether IFC reporting is required, yes sir. So now, what I'll do? I'll not say that we check internal control but not for the purpose of reporting on IFC. We write under section 143 subsection 3I, we are responsible for expressing opinion on adequacy and operating effectiveness of internal financial controls. Next, we evaluate appropriateness of accounting policies used as reasonableness of accounting estimates made by the management. Fourth, we conclude on appropriateness of management's use of going concern base of accounting, and if it's a fair presentation framework, we evaluate overall structure, presentation and content of financial statement to see whether that achieves a fair presentation. This was para 2. So para 1 about your responsibility, para 2 how do you do audit, para 3 is communication. Now para 3. We communicate with TCWG amongst other things, plan, scope and timing of audit, significant audit findings including significant deficiencies in internal controls. We also provide to TCWG a statement that we have complied with relevant ethical requirement. We communicate to them all relationship matter which have a bearing on independence and the related safeguards. Ditto same. And third, out of the matters which we communicate to TCWG under 260, some matters are selected as key audit matters. Key audit matters are sometimes not communicated because law or regulation precludes you. So that's the third thing. This is about auditor's responsibility paragraph. Okay, going back to your report. Okay, the three big paragraph for auditor's responsibility. Next, eighth one, other reporting responsibility. Next, eighth one is other reporting responsibility. Now, what is other reporting responsibility? Any other law wants you to report something. Any other law wants you to report something like Companies Act. Companies Act section 143 subsection 3. Companies Act section 143 subsection 3, we are required to report on 10 matters. Oh, CARO applicable. We are required to report on the 21 clauses of CARO. CARO 2020. CARO 2020 is 21 clauses. CARO 2016 is 16 clauses. So that will come over here. Other reporting responsibilities. So uska heading will be report on other legal and regulatory requirement. Let's go to Infosys. Report on other legal and regulatory requirement as required by section 143(3) of the Act for 10 matters. The 10 matters. And if you go down, as required by CARO 16, we give in annexure B a matter given in para 3 and 4 of the order. CARO K, that's given as an annexure. If I go to annexure B, you will find CARO K 16 matters. Your first one, fixed asset. First one, fixed asset. Ditto same. 16 matters of CARO are given over here. Okay, this is other reporting responsibility. Then comes your signature. When individual auditor is appointed, that individual has to sign. Individual has to sign. And he has to write his membership number. When firm is appointed, any partner of the firm who is a chartered accountant holding COP, any partner of the firm who is a chartered accountant holding COP, that guy has to sign. And one more important thing, now onwards, UDIN, unique document identification number, UDIN should be there in your report. The individual appointed, individual has to sign. Firm appointed, any partner of the firm who is a chartered accountant holding COP, any partner of the firm who is a chartered accountant holding COP, that guy has to sign. Okay, if personal you are appointed, you have to sign in personal name. Or firm is appointed, it will be signed on behalf of firm, any partner who is a chartered accountant holding COP. Let's see Infosys may. Let's see in Infosys how it is signed. See what is written. For Deloitte Haskins and Sales LLP on behalf of firm. Chartered accountants, unka FRN number. The partner who signed, Sanjeev Pilgonkar. Who is he? He is a partner. Uska membership number, UDIN number. Now onwards, this UDIN number is mandatory. If individual was appointed, I'll write CA Mr. A and his membership number and his signature. But if firm is appointed for Deloitte Haskins and Sales LLP, chartered accountant, their FRN number, firm registration number, the partner who is signing, his designation, his membership number and the UDIN number. UDIN number comes for individual also, firms also. UDIN number is mandatory now. Place of signature, where you are signing and the date on which you are signing. The place where you are signing, the date on which you are signing. Place where you are signing, not place where your office is. Where you sign that place. So this is relating to content of your audit report, 12 matters. I just need to put my laptop on charging. 1 minute, I'll be back. Just put it on charging. Okay, moving ahead. Now, question is, if at all the format of audit report is given in law, should I follow that format or this format? If at all the format of audit report is given in law, should I follow that format or this format? Am I audible, visible properly? Am I audible, visible properly, or am I stuck? Am I audible, visible properly? Yeah, this is fine. I think the video is stuck or fine. Yeah, looks fine. Okay, let me just move ahead. If video is stuck, it's okay. Let me just move ahead. Let me just complete it. Question was, if at all the format of audit report is given in law, if at all the format of audit report is given in law, should I follow the format given in law or SA 700? We need to follow the format given under law. So do I say the report is as per SA? Do I say the report is as per SA? We should say the report is as per SA only if the report is as per SA only if all the aforesaid elements, all 12 elements are present in the report. So refer to standards on auditing only if all the aforesaid elements are included in it. Then only you say the report is as per the SA. Okay, now you are required to report. You are required to report on as per the auditing standard issued by ICI. You are required to report as per the auditing standards issued by ICI, as well as you are required to report as per the auditing standards issued by ICAI, as well as, just a minute, this camera, I need to adjust why it's not working. It's actually disturbing. Okay, now it's working properly. Chalo, let's move it. Now it's working properly, the camera. Let us move ahead. Technical glitches come up, that's the issue. Oh, again stuck. Again the camera is stuck. Let me just check. Just 1 minute, let me check, is it streaming properly or not? Okay, yeah, we are again back. So point was, if I am called upon to report, not only as per Indian auditing standard, but also as per international auditing standard. We are called upon to report not only as per Indian auditing standard, but also as per international auditing standard. Would I give one report or two report? Not only Indian auditing standard, but also international auditing standard. Should I give one report or two report? Now, pay attention. You can give one report. You can give one report. You can do so only if there is no conflict between the requirement of Indian auditing standard and international auditing standard, and the report contains minimum of this 12 points which we discussed above. If we are called upon to report as per Indian auditing standard, as well as international auditing standard, I can give one report. I can give one report provided there's no conflict between Indian auditing standard, international auditing standard, and they also contain minimum this 12 points. Okay. And this last one, which is important, this was thing which was asked last time: supplementary information presented with financials. Now imagine you are having your financial statement. Financial statement goes in page 1, page 2, page 3, page 4, page 5 top mein financials over. Page 5 top financial statements are over, and they start immediately form AOC1, or they start immediately BOD report. Now many times if they start form AOC1 or form BOD report, form AOC1, BOD report are not audited by us. They are not audited by us. They are supplementary information, extra information, additional. They're additional information. They are presented with financial statement. Additional information presented with financial statement. Now if additional information is audited, it should be covered in our report. But if they are not audited, it should be distinguished from the financial statement. It should be distinguished from the financial statement. Very logical. Imagine page 1, 2, 3, 4, 5. Now at top your financial statements are over. Immediately form AOC1 starts. User might feel it's a part of financial. User might feel it's a part of financial. If it's not a part of financial, you should request management to distinguish it, to check. When it is a part of financial statement, it should be covered by your opinion. When it's not a part of financial statement, it should be differentiated from financial statement. If not, ask the management to change it. If not, tell the management to differentiate it. If management refuses, explain it in your audit report. Kahan pe? There's a special section for it. Other information. There's a special section for it as per SA. I will not write this. Jahan pe you have to explain it in your audit report. This is as per SA 720. This is as per SA 720. You're required to show it that this supplementary information is not audited. So there might be BOD report, there might be form AOC1. So many things are there. They are presented with financial. At your AGM, they are presented with financial. Now they are not part of financial. They are not annexed. They are attached. They are just presented together. As they are just presented together, not a part of financial, we need to tell to user these are not part of financial. If they are already separated, तो problem नहीं है. But imagine page 5 top financials are over. Immediately they start AOC1. User might get confused. We need to inform to user they are not a part of financial statements. Okay, if we tell to management to distinguish, they don't distinguish, we write it in our audit report. This was your SA 700. So sir, which were the titles or which were the headings in our audit report? 12 points. Let's do it. Which were the 12 points? Fast. First, the title, independent audit report. Second, addressee, appropriate addressee. Third one, opinion. 2 para, one is intro, second is actual opinion. 2 para, intro and actual opinion. Fourth one, basis for opinion, 4 sentences, 1 para. Then fifth one is your going concern, that's only as per SA 570. If there's a material uncertainty related to going concern, that comes. Sixth one, key audit matter only for listed company, SA 710. वो supplementary information not audited, they come here. वो यहाँ पे आता है. That is basically coming here. Just a minute. चला गया. Okay, then after that, which one was the next? We had that's basically going concern, key audit matter. After key audit matter is management responsibility. After management responsibility is auditor's responsibility. After auditor's responsibility, other report on other legal and regulatory requirements. Then comes your signature, date of signature, place of signature. Then comes your signature, date, place of signature. Now going to SA 705. Now let's go to SA 705, modification to opinion in independent auditor's report. 705 is modification to opinion in independent auditor's report. Clearly, they're talking about modified report. Clearly, they're talking about which report? Modified report. Okay, the modified report. There are 3 types of modified report, either clean, modified. Now just now we did, when do we give modified report? Just now we did in your SA 700, when do we give modified report? Okay, so based on audit evidence is obtained, auditor concludes, based on audit evidence is obtained, the auditor concludes that the financial statements are not free from material misstatement. The financial statement contains a material misstatement, or based on audit evidence is obtained, we conclude financial statement contains a material misstatement, or we are unable to obtain sufficient appropriate audit evidence. In that two cases, we are required to give a modified opinion. Modified is of 3 types: qualified, adverse, disclaimer. Modified is of 3 types: qualified, adverse, disclaimer. Objective of this essay is you give a appropriately modified opinion. So when to give qualified, when to give adverse, when to give disclaimer. Appropriately modified opinion. And when do I give modified? To clearly express an appropriately modified opinion when auditor concludes financial statements are not free from material misstatement, or you're unable to obtain sufficient appropriate audit evidence, Now, I just go down. When do I give which modified report? Okay, this chart will help you to understand when to give which audit report. This is a modified opinion. Okay, so first, nature of matter giving rise to modification. Matter giving rise to modification. Why do we give modified? Let me just bring back. Matter giving rise to modification. Either financial statements are materially misstated, you checked it, this, or you are unable to obtain sufficient appropriate audit evidence. One is financial statements are materially misstated. Second is you are unable to obtain sufficient appropriate audit evidence. In either of these two cases, you will give which opinion? Modified opinion. Now, modified is of 3 types: qualified, adverse, disclaimer. Sir, which one to be given when? Depends on the effect or possible effect of this. Okay, I have a question. If I have checked the financial, financial contains a material misstatement, so can I say I know the effect? If I checked financial, I know what is wrong, I know the effect. Okay, if I'm unable to obtain evidence, can I say we have not checked? If I'm unable to obtain evidence, we have not checked. If you have not checked, you don't know exact effect, you know possible effect. Okay, so here, if you have checked it, the word will come effect. But if you have not checked it, the word will come possible effect. If you have checked it, the word will come effect. If you have not checked it, the word will come possible effect. Okay, so we checked it, financial contains a material misstatement, or we are unable to obtain evidence, we are unable to obtain audit evidence. Now, uska effect or possible effect is to be seen. Okay, if effect or possible effect is immaterial, we'll give a clean report. If effect or possible effect is immaterial, we give a clean report. But if effect or possible effect is material but not pervasive, and second is material and pervasive. Okay, effect or possible effect is material, immaterial, a clean report. Material but not pervasive. Now, sir, what is pervasive? What do you mean by word pervasive? Material is something which influences the decisions of user. Okay, material is something which influences decisions of user. What is pervasive? Pervasive किसको बोलेंगे? Okay, just go up. There's a definition. Pervasive. Dictionary meaning of pervasive means it's not at one place, it's spread at many places. So pervasive is something, it is not confined to single element item of account or account balance. What is pervasive? Pervasive effects are those which in auditor's judgment are not confined. They are not confined to specific element, account or item. They are not at one place. Not confined to element, account or item. They are not at one place. Like accountant doesn't know accounting standard. If accountant doesn't know accounting standard, he would have made mistakes at so many places. If accountant doesn't know accounting standard, he would have made mistake not at one place, he would have made mistakes at lots of places. Sir, inventory mein galti, then foreign exchange mein galti, sir, then in your basically investments valuation mein galti. There will be so many places you would have done mistakes. Or if so confined. Okay, I'll give an example for each one of them. For this A point, I write it here. Accountant does not know accounting standard. If he doesn't know accounting standard, mistake will not be at one place, it will be at many places. We call it as pervasive. Mistake will not be at one place, it will be at many places. We call it as pervasive. Second, if it is at one place, that one place is a substantial portion of financial statement. One place is a substantial portion of financial statement. So can you give example for this? Investments for investment company. Investments for which company? Investment company. Okay, sir, one thing wrong. Only one thing wrong. But that one thing is a substantial portion. For an investment company, investments are the major. If there is something wrong in that only, then also it's pervasive. It's one thing wrong, but that's substantial portion of financial statement. And third, if it is in relation to disclosure, the disclosures are fundamental to users' understanding of financial statement. If it is in relation to disclosure, the disclosures are very, very important for user to understand financial statement. Example, material uncertainty related to going concern not disclosed. Material uncertainty relating to going concern. Not disclosed. What is not disclosed? Material uncertainty related to going concern. Okay, so one disclosure not done, but it's a very, very, very important disclosure. So then that will be treated as pervasive. Material is something which influences the decisions of user. Pervasive is something which is generally not at one place, spread at many places. If it's at one place, that one place is a significant portion of financial statement. Example, investment for investment company. And third, if it is in relation to disclosure, the disclosures are fundamental to the user's understanding of financial statements. Okay, so going back. Okay, so if you have checked it, word is effect. If you are unable to check, word is possible effect. If effect or possible effect is material but not pervasive, we give a qualified report. Check kiya, nahi kiya. If effect or possible effect, material but not pervasive. effect or possible effect is material but not pervasive, we give a qualified opinion. Now, under qualified report, effect is material but not pervasive. It's not at many places, it's at one place. One or two things wrong, and that's not substantial portion of financial statement. Debtor में थोड़ी गलती, provision not done properly, inventory some mistake. I'll say financial statement shows a true and fair view except debtors or except inventory. My wording will be except for the effect or possible effect of the matter described in. Except for the effect or possible effect of the matter described in, basis for qualified opinion section of the report, the financial statement shows a true and fair view. Except this, it shows a true and fair view. Okay, but if the effect is material and pervasive, if the effect is what? Material and what? Pervasive. And pervasive means it's not at one place, many places. Imagine one subsidiary not consolidated. Imagine one subsidiary not consolidated. If you are not consolidating one subsidiary, all figures are wrong. Uska PP will be added, uska debtor will be added, uske investments added, uske creditors added, uska cash added, everything is wrong. Is mistake at one place or many places? Sir, many places. Or investment company doesn't allow you to check their investments. Their investment company doesn't allow me to check their investment. Only one asset they are not allowing. But that is substantial portion of financial statement. That is substantial portion of financial statement. So again, it is said to be pervasive. Okay, so if effect you checked it, it's material and pervasive, give adverse. Possible effect you are not checked. Possible effect is material and pervasive, give disclaimer. So pay attention. If I am not allowed to check something, don't directly go to disclaimer. If I am not allowed to check something, don't directly go to disclaimer. There are two options possible. If I am not allowed to check something, you need to understand possible effect kaisa hai. Possible effect material but not pervasive, still give qualified. Possible effect material and pervasive, then you land up giving disclaimer. If I am not allowed to check, don't jump directly to disclaimer. If possible effect material but not pervasive is qualified, possible effect material and pervasive, then disclaimer. Okay with this? So two reasons when we modify the report. Based on audit evidence is obtained, the financial statement contains a material misstatement. And number two, we are unable to obtain sufficient appropriate audit evidence. Now, first may we have checked, second may we have not checked. First may we have checked, second may we have not checked. If you have checked, the word you have to use is effect. If you have not checked, the word you have to use is possible effect. Okay, so if effect or possible effect is material but not pervasive, qualified report. If you have checked, effect is material and pervasive. Effect is material and pervasive, check kiya, adverse. Not allowed to check if possible effect is material and pervasive, disclaimer of opinion. Now moving ahead. Okay, management doesn't allow you to check. What you should do? Management does not allow you to check. Consequence of inability to obtain sufficient appropriate audit evidence due to management imposed limitation. Okay, management put a limitation. I'm not able to obtain sufficient appropriate audit evidence. What should I do? First, request the management to provide or remove the limitation. Don't jump to conclusion. Exams may you to write all things. Request management to give you the data. If they refuse, tell it to TCWG. Try to do alternative procedures. Okay, if you are unable to obtain evidence from alternative procedure, now go to conclusion. First, tell management to remove limitation. If they don't do it, tell to TCWG. And if TCWG also doesn't do it, also try to do alternative procedure. Alternative procedure is not working now. Now, if you conclude the possible effect, see the word possible, you're not checked now. Possible effect is material but not pervasive, qualify the report. Okay, if you conclude the possible effect is material and pervasive, possible effect is both material and pervasive, either disclaimer or withdraw from engagement. Either disclaimer or withdraw from engagement. So if management puts a limitation, first thing what I need to do is tell management to remove limitation. If they don't do it, go to TCWG. If TCWG doesn't do it, try to do alternative procedure. कुछ नहीं हो रहा है, कुछ भी नहीं हो रहा है. Then, if alternative procedure also doesn't work, then you come to your conclusion. Possible effect is material but not pervasive is qualified. Possible effect is material and pervasive. Either withdraw or disclaimer. Okay, now if I am giving modified report, what are the changes in my audit report? If I am giving modified report, how do I give a modified report? क्या change आएंगे report में? We already understood report in SA 700. We already understood the report in SA 700. Now let's understand the changes if it's a modified report with the help of illustrations. I'm taking 4 reports. I'm taking 4 audit reports. 1. Qualified, you checked it. 2nd, qualified, you are not allowed to check. 3rd, adverse, 4 disclaimer. 4 audit reports I am taking. 4 audit reports I am taking. We'll try to understand what gets different in your reporting if you are giving a modified report. Okay, the first one, we have a qualified opinion due to material misstatement. There's a material misstatement and it's material but not pervasive. So qualified opinion. Material uncertainty related to going concern are not there. Key audit matters are communicated as per 701. Key audit matters are communicated as per 701. Fine. Now, title will remain same. No change. Addressee remains same. No change. I'll try to tell you what are the changes coming. What are the changes coming? 1. Over here, the word qualified opinion is added. It's not opinion, it's qualified opinion. User can directly understand it's a qualified opinion. See, this is the first change, a qualified opinion. First change, intro para is same. Intro para is same. Now, second change. The second change is, I'll write, we are giving qualified. Okay, qualified may we say, except these things are fine. Effect is material but not pervasive. Effect is material but not pervasive. Over here, inventories are valued only at cost. Now, inventory should be at cost or NRV, whichever is lower. They valued only at cost. So, can I say inventory mein there is something wrong? Few inventories are damaged. Few inventories are damaged. They should be at NRV, but they have taken only at cost. The inventories are overstated. Inventory overstated, profit is also overstated. So we have to describe about that. Okay, in our report, what do we write? In our opinion, to the best of information according to the explanation given to us, except for the effect, I have checked. So, except for the effect of the matter described in, you checked it. You checked it, the word is effect. Except for the effect of the matter described in basis for qualified opinion section of a report, the financial statement gives a true and fair view. This is a second change. Okay, third, basis for opinion ki jagah basis for qualified opinion. Basis for opinion ki jagah basis for qualified opinion. Fourth change. Fourth change, in your basis for opinion, one extra para added. Why modified? Why qualified this extra para? This is the fourth change. You are having extra para. Why qualified? So you will describe inventories are valued only at cost, not at cost or NRV, whichever is lower. The full para, extra para is added. The full para, this is the fourth change. The company's inventories are carried in balance sheet at XXX amount. Management has not stated inventory at lower of cost or NRV, but has solely stated at cost. This constitutes a departure from accounting standard 2. If inventory was valued at cost or NRV, whichever is lower, inventory will go down by this much. Inventory will go down. Cost of goods sold will go up by this much. Closing stock goes down, COGS will go up. Inventory goes down, cost of goods sold will go up, profit will go down by this much. So you have to quantify the effect. We have to quantify the effect when we give a modified report. This comes up. And then the second para. So over here one extra para added. Full extra para is added. Then basis for opinion में 4 general sentence. The last sentence. We believe that the audit evidence we obtained. We believe that the audit evidence we obtained is sufficient appropriate to provide a basis for our qualified opinion. This is the fifth change. This is the fifth change. Okay, so first opinion की जगह qualified opinion. Then intro para is same, opinion except for the effect of the matter described in basis for qualified opinion section of the report, the financial statement shows a true and fair view. Third, basis for qualified opinion. Fourth, why qualified, full para added. Fifth, ye last line, we believe that the audit evidence we obtain is sufficient appropriate to provide a basis for our qualified opinion. Next, key audit matter. Now pay attention. Matter for which you are modifying your report. Matter for which you are modifying your report, that is definitely a key audit matter. Matter for which you are modifying a report, वो पक्का key audit matter है, वो तो 100% key audit matter है, but you will not write it under key audit matter because it's already described separately in basis for qualified opinion. So matter because of which you are qualifying a report, you would have paid more attention. It's definitely a key audit matter, but does not come under key audit matter. What I'll write over here? What I will write over here, in addition to matter described in basis for key qualified opinion section of the report, the other key audit matters are, I repeat again, matter which gave rise to modification, pakka you would have checked in detail, it's a key audit matter, but we don't report under key audit matter, it's already described separately, don't duplicate it. So in addition to the matters given in basis for qualified opinion section of the report, the other key audit matters are, sixth one, management responsibility same, auditor's responsibility same, other reporting responsibility will be modified accordingly. Other reporting responsibilities will be modified accordingly. This is seventh change. Okay, so in your other reporting responsibility, 143 subsection 3, 143 subsection 3, 10 matters. 10 matters mein fifth one, whether financial statement comply with accounting standard. Fifth one was whether financial statement comply with accounting standard. So here, what is not complied? AS2. All right, except for the effect of the matter given in basis for qualified opinion section of the report, the financial statement complies with accounting standard. Except this, it complies with accounting standard. Did you understood? Did you understood? Okay, so this is 7 changes. If it's a qualified report. Okay, this is qualified, we checked it. This is qualified, we checked it. Now we go to qualified, but we are not able to check. Qualified, but we are not able to check. Now imagine company has done a long-term investment. Imagine company has done a long-term investment. Okay? Now as per AS13, your long-term investments are carried at what? Cost, unless there's a permanent diminution. The company has done a long-term investment, they are carried in the books at cost. Now it should be carried at cost unless there's a permanent diminution. As an auditor, how will I understand whether permanent diminution is there or not? Market price is not to be seen. Market price goes up and down daily. Whether permanent diminution is there or not, how do I understand? Company has made a long-term investment, they have shown in their books as cost. I need to check whether permanent diminution is there or not. See, I need to see what? How the company where our company has invested. the company where our company is invested, how that company is doing. If that company is making losses, if that company has a going concern issue, then I say there might be a permanent diminution. So how do I understand the investments में permanent diminution is there or not? I need to check the company where we have invested, जहाँ invest किया है, उस company के financials. As an auditor, you need to check that company's financials. You need to speak to that company's management. You need to check that company ka audit report, unka audit report, or you may speak to their auditor also. So how do I understand permanent diminution is there or not? How do I understand permanent diminution is there or not? I need to check the financials of the company where we have invested. I need to talk to their auditor. I need to talk to their management to understand how they are doing. Now, management did not give me any of this. Management did not give me the financial statements of that company. They did not allow me to talk to the auditors of that company. They did not allow me to talk to the management of that company. Nothing. So can I say I am unable to obtain sufficient appropriate audit evidence whether permanent diminution is required or not? Okay, you are unable to obtain sufficient appropriate audit evidence. And now, investments, okay, investments are material, but not like a substantial portion of financial statement. Material hai, but not substantial portion. That's material but not pervasive. The possible effect is material but not pervasive. Give a qualified report. The qualified report, inability to obtain sufficient appropriate audit evidence regarding investment. Investment, long-term investment, whether permanent diminution there or not, I'm not able to understand. It's material but not pervasive. Okay, so title same, addressee same. One change over here is qualified opinion. Second change over here. Now, have you obtained evidence? You are unable to obtain. Don't write the word effect. Don't write the word effect. Possible effect. The word has to be possible effect. So check. Except for the possible effect of the matter described in basis for qualified opinion section of a report, the financial statement shows a true and fair view. Third, heading में यहाँ पे basis for qualified opinion. Now fourth, the full para is added. Why qualified? Full para added. That's the fourth change. Why qualified? That's a full para added. They've done an investment which is carried in books at cost. Now, whether there's a permanent diminution or not, we were unable to obtain evidence about that because we were denied access to financial information management auditors of that company. We were unable to, we were denied access to their financials, unke management, unke auditors. I'm not allowed to talk to anyone. I didn't got their financial. So permanent diminution there or not, I don't know. We are unable to determine the effects required. And the fifth change, we believe the audit evidence we obtained is sufficient, appropriate to provide a basis for our qualified opinion. Sixth change in your key audit matter. In addition to the matters given in basis for qualified opinion section of the report, the other key audit matters are. And seventh change, other reporting responsibility. Seventh change, the other reporting responsibility is modified accordingly. When I give a qualified report, 7 changes. Okay, adverse report. Adverse report, same 7 changes. One subsidiary not consolidated. One subsidiary not consolidated, all figures are wrong. One subsidiary is not consolidated, all figures are wrong. Is it just material or material and pervasive? Is it just material or material and pervasive? Sir, material and pervasive. Material and pervasive. The adverse opinion is given. 7 change again here also. So which are the 7 changes? First, title same, addressee same. Here you will have adverse opinion. This is the first change. Second, because of significance of the matter described in basis for adverse opinion paragraph, the financial statement do not show a true and fair view. Adverse means the wording is financial statement do not show a true and fair view. This is the second. Third, basis for adverse opinion. Then fourth, why adverse? Why adverse? So one subsidiary not consolidated, all figures are wrong, we are not able to quantify the effect. The effects have not been determined. If you are able to determine effect, you have to write. You are able to quantify effect, you write. You write, you are not able to quantify effect because बहुत सारे सब चीजें change है. Fifth one, the same. We believe that the audit evidence we obtain is sufficient, appropriate to provide a basis for our qualified opinion. Sixth, except for the matters given in basis for adverse opinion section of the para, the other key audit matters are, or there are no other key audit matter. But the reason, the matter for which you are modifying is pakka a key audit matter but not written here because uske liye we have a separate para already. This is the sixth one. And seventh one, other reporting responsibility will change accordingly. Other reporting responsibility will be modified accordingly. This is the seventh. Again, 7 changes when I give adverse report. Now comes disclaimer. 9 changes. If I'm giving a disclaimer, now why are you giving disclaimer? Okay, company has done an investment long term. Company has done an investment which is long term. Okay, long term investment is done by company. And pay attention. Whether permanent diminution is there or not, I need to talk to the management of that company or auditors of that company, or I need financials of the company where our company has invested. They don't give me this. I'm unable to obtain sufficient appropriate audit evidence. Now, investment represents 90% of your total asset. Okay, investment represents 90% of your total asset. Can I say it's one item, but it's a substantial portion of financial statement? It's one item, but can I say it's a substantial portion of financial statements? It's material and pervasive. The same reason, long-term investment, we are not allowed to check the financials of that company or to talk to their auditor or management. So this is the same example, but our investments are 90% of total asset. It is material and pervasive. Okay? The investment represents 90% of your total net asset of the company. You are unable to obtain evidence about one single element, investment. And the possible effect is material and pervasive. We are giving a disclaimer of opinion. Sir, what are the changes? One, heading is same. Your heading is same. Address is same. Now here, disclaimer of opinion. This is number 1. Now, intro para, don't write we have audited. Don't write we have audited the accompanying financial statement. Audit kahan kiya hai? You're not audited. You're not giving opinion. You are telling we are unable to express opinion. We were engaged to audit. We were engaged to audit. Not we have audited. We were engaged to audit. This one. And this is the third one, your opinion. We do not express an opinion on the accompanying financial statement. We do not express an opinion. Disclaimer. We're not giving any opinion on accompanying financial statement. Fourth one, basis for disclaimer of opinion, heading में. Fifth one, why disclaimer? Why disclaimer? Uska pura para. Okay, the company has done an investment. Investment is carried at cost. We don't know whether any permanent diminution is there or not. Sir, why we don't know? They did not allow us to. They did not allow us to see the financials, talk to the management or auditor of that companies. Okay, this is the fifth one. Now, the second para is fully omitted. That's the sixth change. The sixth change over here. The second para in basis for opinion fully omitted. That 4 sentences. Second para, I just write fully omitted. यहाँ पे ऐसे लिख लेता हूँ. Second para fully omitted. 4 sentences which were there. Audit is conducted in accordance with standards on auditing, all that things. Second para fully omitted. Next one, key audit matter fully omitted. 7th, key audit matter fully omitted. That's the 7th change. 8th, auditor's responsibility, instead of 3 para, only 1 para. Auditor's responsibility, instead of 3 big para, only 1 para. So instead of 3 paras, only 1 para you are giving. What is to be given? Our responsibility is to conduct audit in accordance with standards on auditing and issue our audit report. However, because of the matter given in basis for disclaimer of opinion section of our report, we were not able to obtain sufficient appropriate audit evidence to provide a basis for our opinion. We were independent of the entity that we are writing. So instead of 3 para, only 1 para. And the 9th change, report on other legal and regulatory requirement will be modified accordingly. Okay, so if it's qualified or adverse, 7 changes. If it's a disclaimer, 9 changes. So which were the 9 changes again? First one, instead of opinion, disclaimer of opinion. Number 2, don't write we have audited, we were engaged to audit. We were engaged to audit. Third one, we are unable to express any audit opinion. That's the third one. Fourth, basis for disclaimer of opinion. Fifth, extra para, why disclaimer. Sixth, second para goes away in basis for disclaimer. That 4 general sentence goes away. Seventh, key audit matter goes away. Eighth, auditor's responsibility, instead of 3 para, only 1 para. And ninth one, other reporting, other legal and regulatory requirement will change, modified accordingly. These are the changes which come whenever we are having. These are the changes whenever we are having disclaimer of opinion. Okay, so we understood today clean report, when to give, how to give. Then we understood today modified report, when to give, how to give, and modified includes 3 parts: qualified, adverse, disclaimer. Any doubts, anybody with today's work? Any doubts, anybody with today's work? Pervasive क्या होता है? I tell you again, pervasive is something which is not at one place. The effect is not at one place, many places. Or if it is at one place, that one place is substantial portion of financial statement, like the 90% of investment. Investment is 90% of total asset. तो उसको pervasive. And third, if it is in relation to disclosure, the disclosures are fundamental to the user's understanding of financial statements. And see, just remember one thing. You have to put in efforts. And I tell you once you are able to put in efforts and once you reach to a certain level, you will not like to go back. Just one push is required. I repeat, one push is required to reach yourself to the next level. To make yourself pushed, you ensure that you are pushing yourself. One time you write down mock test, you are cracking it, you don't want to go back. You'll ensure that you're putting your efforts more and more. And just one more thing I'll say, focus on the step in front of you rather than the whole step. Standards we have to do tomorrow. Today we did only 2. 4 standards we need to do tomorrow. Any doubts, anybody? And once more a reminder, crash batch for CA final auditing. I'm starting from 1st of September. 15 sessions, 4 hours each, total 100 hours duration. You can attend. You can also recommend it to all your friends who are writing exams in this December or even in next May. This will be useful for all of them, not only this December, even for next May as well. And one more thing, we will be covering everything properly. So don't think crash batch may just superficial. No, it will be covering everything in a proper manner. Just few unimportant things might be removed. Chalo, that's it. See you all tomorrow. Bye bye. Take care.